Is the war between Russia and Ukraine the biggest factor we have to consider right now that's driving markets, or is it something more?
Well, I think it's a part of it because, at the end of the day, war is inflationary, and the Ukraine-Russia conflict came at perhaps the worst time as the COVID-induced inflation was already climbing significantly. When you look at supply chain issues and you take a country like, a commodity producing country like Russia out of the equation, that's not something that's rectified overnight. But it's not the only thing. I don't really view this as a buy the dip type of environment. I mean, there's a clear rotation in the market. There's a change in leadership, I believe, that's taking place. I mean, look, energy has doubled over the last 2 years, yet it's barely 4% of the S&P. So I think there's a number of factors. Clearly, the Fed and their actions going forward will be at the forefront. But Ukraine-Russia is clearly a significant factor when you look at inflation going forward.
So Patrick, if that's the case, if this, in your words, is not a buy the dip environment, should you be selling the rallies? Should you be holding pat, or are you buying in other parts of the market that may be more attractive?
Well, it depends what you own. I think if you have broad exposure to the wide indices, perhaps you should be selling some exposure because they're overexposed to sectors like tech. But there are definitely opportunities out there. For example, we've been big owners of gold over the past couple of years. We think it should be a part of your portfolio, and I think it helps to hedge the debasement of the dollar. But even when you look at companies, for example, we really like the Class 1 rails that are out there today.
So Class 1 rails, meaning which ones? Which ones in particular are the ones that are attractive to you?
Yeah, the most attractive one today, I think, is Canadian Pacific. Shareholders approved the acquisition of Kansas City Southern late last year. And Andrew Carnegie once said, we have over 100,000 miles of steel that bind the nation together. Well, the reality is it's now combines all of North America together. And Canadian Pacific has rails running from Canada all the way to Mexico. It's a play on onshoring. With higher energy prices, they stand to benefit. They have a lower carbon footprint. And by the way, in an inflationary environment, in a consolidating industry like the Class 1 rails out there today, they have a lot more pricing power. So we really like, a company like Canadian Pacific in this environment.